Hey, this is Joe from AskJoeAboutMoney.com. Today is January 31st, 2023, and I'm actually doing a market recap today, an hour before the market closed, because I didn't take any trades today. And I also want to have a lesson today on not taking trades because that's just as important as taking the trades. And so let me do my normal review, and then we're going to have a micro lesson today on when you shouldn't be taking trades. And we're going to talk about that in a couple of minutes. But first, let's talk about my routine that I have every morning. So when I come in, the first thing that I'm looking at is a 60-minute chart. So the reason why I look at a 60-minute chart is because I want to have a better idea as to where the market is on a longer time frame. Okay. And I really like to call that context, okay, context, because when I'm zeroing in and looking at what a 5-minute chart is doing and what the bars are doing, that's based on the context of what the overall market is doing. Why do I say that? Because I find that my best trades come when I'm aligned in multiple time frames. In other words, I'm going to show you a real example right now. Here is a 60-minute chart. And I have this vertical line here. This is the close, so the close of yesterday. So I'm looking here, and you can see that this is what I call a broad bull channel. The market is going up as indicated by this longer trend line. And then I have this trend line that's drawn in here from this low and this low. And we're opening up today right near support. Okay. So now, this, to me, if I was trading off a long-term time frame, this would be an area where I would consider getting long. So I'm already long biased, but that being said, is that if it breaks this area, then we could come down to here, and we could come down to here, and then ultimately down here. But when I'm looking at this chart, I'm saying, okay, initially I'm saying we're at rising support, so I'm going to look long. But it doesn't mean that I won't take any shorts, okay? So let's see what happens when the market opens. So the market's now at this point. So that's a 60-minute chart. That gives me an idea of we're at long-term support. So in order for me to go short, I have to really see some big red candles. I have to really see it be breaking support, because a lot of times I go in with this mindset of thinking we're at support. But when it breaks support, okay, it goes sometimes in a hurry. So it's not that I'm going in on a long only. It's that I know the fact is whenever I look at the market, I'm never trying to predict. I'm never trying to put my opinions. It's all about just being aware and looking at what actually happened. What actually happened is we have a rising trend line and we're at support. That's a fact. Now, what happens at support? I don't know, because sometimes support is broken and sometimes support holds. But so let's switch to the 5-minute chart, because once the market opens, I look at the 5-minute chart. Now, we talk about context. So the first context, okay, that we talked about is going to be that what happened yesterday. So yesterday we faded down. We're also in a heavy news week. We have the FOMC tomorrow at 2 o'clock, okay? And so now the context is that yesterday wasn't an overly decisive day. And so now what I'm going to look at the open is for clues. Is today going to be a trending day or a range bound day? So when the market opens, okay, here's the market. So we know that we're coming off of a downtrend from yesterday. As a matter of fact, let's go ahead and draw in our trend line. Let's go ahead and draw it from the top here, and we'll draw it down this way. And so as the market opens, okay, like I said, typically within the first half hour, I'm not trading, but I am watching very closely because it's going to give us a lot of clues for the rest of the day. So the first bar is a green bar, and there's a tail on top, but it's a green bar. And so we're at support. So if you see a green bar, if I would see another green bar and then maybe another one, I would be inclined to get long, because this could be a trending day. And we already know, based on the trend line that we drew, we are at longer term support. But now the next bar is a red bar, okay? Then we have this bar here, wick on top, wick on the bottom, very small body, okay? Big green bar, okay? Small red bar, okay? Big red bar. At this point, what's working in the market? So far, we're about half hour into the market, and so far, what's happening is we call this a limit order market. And what that means is that whoever's making money in the market today is selling high and buying low, selling high. This is the opposite of a trend. Okay. So when I'm seeing this in the first half hour, now my likelihood of trading in the first hour, let's say, is going to be low because until I see a decisive breakout, this is a range bound open. Doesn't mean that it can't change, but as of right now, we are in a range bound open. Okay. Here we go back to test support. Red bar, big green bar. But again, this is not a type of market where, even though I see in context, this is now a big green bar with another green bar, but it's in the context of this just happening. Okay, so this is not something that makes me excited to put a trade on. Okay, then you see a red bar, another green bar. And just by, now we're sitting here, and this is about 11 o'clock Eastern, and just by seeing a lot of wicks, not big bodies, at this point, I pretty much, and then you have lunchtime coming up, not too far away. So at this point, I've pretty much decided that I'm not going to be trading, because at least for the next couple of hours, because there's no enthusiasm. I like to trade on the days, and we get them. We have to just be patient. We're going to talk about that in a minute. But I like trading on days where there's an obvious trend, or it's an obvious big range and you're able to buy low and sell high. But when you have lack of enthusiasm, to me, it's just not worth the risk to take these types of trades. And you can just tell the candles, like, it's just not, there's no enthusiasm. There's no big buying pressure. There's no big selling pressure. And that would make sense because the context of it is what? Tomorrow is FOMC day. And I want to talk about that as well. So as you can tell, so this, again, this is not something I want to trade, and I'm going to tell you why in a minute. But so I pretty much decided I'm done trading now. I did come back in the afternoon just to see what was happening. And again, the market did end up trending up, but this is not the type of market that I like to trade. I would have traded it from the long side if I had to pick one, but I elected not to trade. So today is a no trade day. Okay, that's 2 days in a row of no trade day. So let me talk about that, because I believe that the most important thing, if you're not successful right now in trading, the most important thing you could be looking at is not the winning trades, not how do I get the next winning trade. I know that's what everyone focuses on, but what you should be looking at is the bad trades. If you were just able to eliminate half of your bad trades, that would solve that. A lot of times, I know for me, it went from making me not profitable to profitable just by eliminating half of my bad trades. And bad trades happen when you're in a situation of trading a market that lacks conviction or doesn't fit my trading style. So here I am 2 days in a row, and I haven't taken a trade, right? And I may not take a trade till after the FOMC tomorrow at 2 o'clock. So just because we're traders doesn't mean we have to trade every single day. There's sometimes a week, 2 weeks, 3 weeks in a row where I'm in tune with the market, and the market is rewarding the way I trade, and I'm trading every day, multiple times a day. I just happen to be right now in a situation where I'm not seeing reasons to take risk in the market because I want to save my gunpowder for when that happens. That being said, and I want to share this with you because I've had issues trading FOMC in the past. And let me tell you why I've had issues, and let me tell you how I fixed them, okay? FOMC releases, they have a news conference, and then they have questions and answers that happens at 2 o'clock. So between 2 o'clock and 2:30, there is going to be a lot of volatility. There's going to be a lot of volatility. And what I used to do is turn on the news and listen to it on CNBC and listen to what they were saying and try to make sense of it. In the meantime, the market is telling me exactly what it's doing by the virtue of, are there green bars or are there red bars? Is it at support? Is it at resistance? And I'm not paying attention to what the market is doing. I'm getting caught up in all the hype of the volatility. So what I'm going to do tomorrow is I'm going to sit at my computer. I'm not going to have my TV on, and I'm going to be watching the market. And the first, like I said, 15 minutes to half hour from 2 o'clock to 2:30, I am not going to trade. I'm just going to watch what happens, because in that volatility, the way I trade, I don't have an edge. But then after that settles in, oftentimes we have a really nice move from 2:30 to the close. and I want to be there for that. In the morning, typically there could be one move in one direction, so we'll see what happens in the morning and whether or not I'm going to participate in that. But really what I'm looking forward to tomorrow is looking at what happens at 2 o'clock and just reading price action. Not worrying about, is it 25 basis points? Is it 50? What is he saying in the news conference? How is he answering questions? Curious. So I will watch that later on and I will find out what happened. But when the market is trading, and this is a really good lesson that I learned, is that when the market is trading, I'll worry about the news later. I want to know if they're buyers or sellers now. Later, I'll worry about what happened in the news because it's not going to help me now. If I think that me, Joe Greco, as an individual, is going to outsmart Wall Street and the billions of dollars that they have and the analysts and all the research and AI, I would be making a mistake. But what I can do is I could be a trader and I could watch price action and I could because remember, price action leaves footprints. If they're going to buy because of something that's said, I'm going to see it on the chart. So again, tomorrow, my game plan, I'm going to be ready. I'm going to be mentally prepared. I'm going to look for a move early on. If I don't take a trade in the morning, that's fine, and I'll be prepared for taking a trade in the afternoon. I'm also open to the fact that there are times when there's an FOMC meeting, and then there's some big volatility, and then there isn't a move. I'm not expecting a move. I'm not saying there's going to be a move, but if there is a move, I'll be ready to take advantage. Okay? With that, trade well and manage your risk.